Hello and welcome to daytradingforexpro.com. This meeting is hosted by yours truly. My name is Robert Hammond, and we're going to go through an agenda I have set up here. The agenda is how to trade Forex. We're going to go through technical analysis, fundamental analysis, money management, emotion management, trade management, taught by Robert Hammond from daytradingforexpro.com. And if you stick with us, I promise you we'll have you trading like a pro. Trading Forex, which of course stands for foreign exchange, and we'll have you trading like a pro. And so let's talk about technical analysis and show you some of the tools and techniques we use. So here we have a screenshot of MetaTrader 4, one of the best Forex trading softwares in the world, and it's available for free from all the Forex brokers that you can sign up with. There's a couple of hundred of them throughout the world, and you can get this software for free, and you can see some of the techniques we use here. Kind of a downtrend here and a trading range here, uptrend here, and you can see some Fibonacci numbers that we're using here and some of the indicators we're using here. So this is one of the tools that we use in technical analysis. And here's another one, because we like to use a couple of different techniques, and some of the courses that we're going to provide for you. And if you become a member of our Day Trading Forex Pro members, we do things like come to charts like this and just analyze things from the raw data. We're looking at the raw data here, which is basically a technical chart, candlestick charts, 1 hour of the British pound, US dollar. And so here we had a downtrending channel. Up here we had a trading range, and we just draw a few of those lines to make it obvious what's going on in here. At a trading range up here and downtrend here. Gone back into a bit of a trading range here, and you'll see this when we're showing you some of the technical charts, some of the skills that go right back to the raw price action, as opposed to be totally reliant on indicators. We use some indicators, but we really like to go back to raw data, price action, because really indicators are just derivatives of price, of the price charts. So again, here we have an uptrend starting right here. And it's good to be able to do this basic technical analysis so that you can really make sense out of these charts. And if you can make sense out of them, you can make an accurate forecast as to what direction markets might go next. So that's technical analysis. And we use some other information too that we use. Here we've got fundamentals. So basically fundamentals mean what events, what fundamental factors are happening in the world that, this is not technical analysis, it's fundamental. So there's a handful of reports that come out every day, and this shows a screenshot of basically a spreadsheet style tool to show you Monday, January 14th at 8:30 a.m. Eastern Standard Time. There is a report out on the Swiss franc, a Purchasing Managers Index, and it shows here the importance and what actually happened in the forecast in the previous. So these reports are the fundamentals, the events and reports that come out at specific times, and many of these are really market-moving events. For example, you can look here on Friday, January 8th, and scroll down to some of the high importance events, reports, and there's one here, US dollar change in non-farm payrolls, and as you can see, that number is 85K. And what did that do? Well, let's take a look at it, because we were just there looking at the chart. So on Friday, January 8th, this is what happened. British pound went way up as a result of the unexpected negative view. And also you can see here what happened. Euro went way up as a result of a negative report, basically saying there was more jobs lost in the United States, and that was a negative expectation. So had a negative impact on the U.S. dollar, positive impact on the euro. So that's a view of fundamentals. We're working our way through the agenda. So we have covered technical analysis, fundamental analysis, money management, which covers areas like, don't risk too much to start with when you start a Forex account. You should not be risking money that you can't afford to lose. Not that you will lose it all, certainly not if you follow our course. But it is money that's higher risk than some investments. So it certainly needs to be money that you can afford to work with. And you don't want to trade and put all your money into one trade. You should not be risking more than 2 to 5% of your capital per trade. That is your emotion management. This is the one area that I believe most trading systems that are not like ours, most trading systems don't cover this. And what do I mean by emotion management? Emotion management is about you. How you manage your emotions of greed, of fear, of anger, all those emotions that are negative impacts to your trading, because true good quality trading focuses on these: good quality technical analysis, fundamental analysis, money management. And the emotions, the human emotions that you have often are detrimental to good trading. We also covered trade management, which means what do you do? What the heck do you do once you're in a trade? The things like, what's the price you're going to put the trade in at? What's your stop loss? What's your take profit? Are you going to use a trailing stop loss? At what point are you going to exit the trade and take profit? So we cover all of those things, ladies and gentlemen, and that's what we do at daytradingforexpro.com. We teach people to become better traders, how to become true Forex trading professionals. Now, by its name, day trading, it implies that we typically are intraday traders and sometimes scalpers. And what does that mean? Well, it means that we tend to go in and out of the market fairly quickly. Our trades could last anywhere from a few minutes to a few days, maximum of a week. Wouldn't last more than a week because we do like to exit Friday at the latest, Friday afternoon by 12, because we don't want to hold a position over the weekend because there's so many event risks going on these days that could swing the markets. And the Forex closes over the weekend, closes at 4:30 Eastern Standard Time. Friday afternoon opens again about 4:30 Eastern Standard Time, Sunday afternoon. So over a weekend, there can be a fair number of events happen that can move, can gap the Forex currency pair that you're trading and eat away at your profits. So better to exit on Friday. So getting back again, what did I mean by day trading? Well, it's typically intraday or fairly short-term trading. Not that we try to make it that short. The goal is to get in and stay in until we hit our targets, or ride a trend until it looks like it's dying out. So often it's the target profit. It's the market itself that takes us out of the trade, depending on how it, where it moves, how it moves. If it moves to our target, we exit our target profit. If it's a nice strong trend, we stay in and try to get as much out of the trend, much profit as we can. So that's it, ladies and gentlemen. I'm wrapping it up for daytradingforexpro.com. taught by Robert Hammond, a day trading Forex professional. Thanks for listening. Hope to see you on the other side when you sign up and become one of our students.